So, hey guys, welcome to the Forex Time Continuum. Yeah. On this video, as promised earlier, we're gonna talk about the trade line breakout strategy, the supply and demand style. Yeah. So, I'm gonna start. Yeah. It's a very easy method to catch some pips. Yeah. So, I'm gonna jump into it. Yeah. Tell me on the comment section if my sound is clear and my video is clear. Yeah. So let's start. Yeah. I hope my sound is clear. Yeah. I hope my sound is clear. It will be a 20 minutes, 30-minute session. We're gonna talk about the sell model first. And then I prefer posting a separate video on the buy model. Yeah. So let's start. Okay. I was to stream on both Facebook and YouTube, but I had a problem with my streaming service. Yeah, so the first step is to find a trading market. So in this case, it's a bullish trading market. Yeah. Let me make it a bit smarter. Yeah, so tell me on the comment section if my sound is clear. Yeah. I think that's better. So what you do, you find a trading market. In this case, we are bullish. So in this case, we are bullish. This case, we are bullish. So if your first step is to find a trading market. Yeah. So in this case, it's a bullish market. Let's make it a bit smarter. Yeah. So your first step is to find a trading market. Yeah, and then identify in the sell model, you first identify the demand zone which have been consumed. Yeah. So your first step is to locate the two demand zone before the change of character. Yeah, so where did the market first change character? So your market first change character here, or the break of structure, or the shift, whatever you call it. So you identify the two demand zone after the before the change of character. Yeah, so we're gonna call this one our first. This is our first demand zone. But about 16. So this is our first demand zone, and this is our second. This is our second demand zone. Remember, this is a sell model. Yeah, thank you for those who are joining the stream. Yeah, so that's our second demand zone. After you have identified your demand zone before the break of structure or before the change of character, now you identify the supply zone which are responsible for consuming the demand zone. Yeah, so which supply zone did consume the which supply zone consumed the first demand zone. Yeah, which supply was responsible for consuming this first demand zone? You have to identify that. So let's mark the first supply. This is the supply, this one, which was responsible for consuming the first demand zone. Are we okay? Okay. So this is the first supply zone, which was responsible for consuming the first demand zone. This is the supply that pushed the price down and consumed this demand zone. So this is our first supply, and now we identify the supply that was responsible for consuming the second demand zone, which is this one. This is the supply that pushed the price and broke this structure below. You see, so this is our second supply zone. Yeah, so that's our second supply zone. Yeah, after identifying that, so the strategy is you have to identify the demand zone prior break of structure, yeah, or the change of the change of character. Yeah, so let's write something here. So we have said identify to demand. We are on the SL model to demand or change of character, okay, or the change of market direction, yeah, or the break of the trend line. Yeah. So number two is you identify the two supply zones responsible for the market structure break or the change of character, which consumed the previous high lows. In this case are high lows. So the first demand zone is a high low, second demand zone. So the supply zone which were responsible for consuming both high lows, the previous two high lows. Yeah, previous demand, let's call it demand zones. Yeah. So number three is the key. Our entry will be based on return to the our entry will be based on the return to the second supply that was responsible for consuming the second demand zone. Yeah, so entry is based on return to the second supply zone, which was responsible for consuming the second demand zone. I think we can call this one number 2, this one number 3. I will show chart examples. These are setups that are almost there in every time frame. But there you can even use, as I was telling the group, you can use them as the lower time frame confirmations. So number 1, we forgot to put the number 1. Yeah, number 1 is obvious. Identify a trading market. Identify a trending market. You can't use this strategy on a consolidation or a sideways market. So those are the points that you note. So the first one is identify the trading market that we did. This is a bullish trading market. So the second is identify the demand zone before the break of structure or before the change of character. So number 3, you identify the supply zone which are responsible for consuming the two demand zone and number 4, which is the key point, our entry is based on the return to the second supply zone that was responsible for consuming the second demand zone. So let's put these rounded there. It's okay there. So you can tell me if the video is clear on the comment section. So the video is clear, is okay. So this strategy usually pays a lot. So you have to be keen. So as we've said, you have to identify a trading market. After identifying a trading market, you need to identify the two demand zones before the BMS or the change of character. And then number 3, identify the supply zones which are responsible for consuming the two demand zone. And then our entry is based on return to the supply zone, the second supply zone, which was responsible for the consuming the second demand zone. This is our entry. So guys, by the way, for this kind of setup unajua nimezoea kuambia napenda kuingilia kwa weeks. So for this kind most of them reach the 50% or open of the candle, open of the facing candle. So chances of being left behind by this setup are very high, so you have to be keen. It usually reaches the 50% or the open of the candle, the buy candle. So the base candle there is a buy candle because you are selling. So you have to be very keen on the entry. So you can take screenshot of these. So let me change the position of these. We add some font around 20. 20 should be clear now. Let me do these. Supply zones. Let me do these. Return. That's a bit better. So you can place it here. So those are the key things, the 4 points to look at the cell model. So I'm gonna go into the chart examples of the cell model. So I hope everything is clear. Demand zone before the break of structure. And then identify the supply zone responsible for breaking the first and the second demand zone. And then the entry will be based on this return. So I pause. Yeah, so chart examples. Thank you for those who are watching. Yeah. So chart examples. We're gonna first look at Euro USD. Yeah, I had prepared some chart examples in order to save some time. Yeah, I know it's a weekend. I'm using your most of your time. Yeah. So I had some chart examples. Yeah. So I'm gonna just explain. It's easy. These setups kwanza kwa lower time frame. On the lower time frame, this setup usually present a lot. Yeah. So these are 4-hour setup. As you can see. Yeah. So let me use the cursor. Yeah. So I've identified the both demand zones. So this is our first demand zone, and this is our second demand zone. Okay. So we now identify the first supply zone, which consumed this demand zone, the first demand zone, which is this one. You see, this one is not our first supply. Why? Because it pushed the price, and it didn't break this structure here. Yeah, so it's not a supply that consumed this demand. So the supply that consumed this demand is this one. So this is our first supply. So you have to be keen. Yeah, so because it's gonna confuse you. Because if you've, let's for example, you've said this is your first supply and this is your second supply and this is a return, you would see the price would move down and again come to break evens. Yeah, so you have to be keen. So it has to break the body, or let's use the weeks. It has to break the weeks of the previous demand. Yeah, so you see this the previous demand has no weeks. So there is basic base candles. They block the structure using this supply zone. Yeah, so that's our first demand. Okay, the second demand zone is this one. This is the second high low. Yeah, so the BOS happened where the break of structure happened here. Which supply zone was responsible for that break of structure, or the consuming of this demand zone? It's this one. Now you place your 50%. I use a gun box. This gun box here. Yeah, you just have to edit it for the 50, the 0, 50, and 100%. Yeah, so our basing candle is this buy candle. This is the green candle. So you use the open to the close or to the wick. 50%. That's your entry. Yeah. So this is usually a jackpot. Yeah, and you have to be keen. You can add other, you can add other things like conferences on the left side. So if you've seen here, this zone was very significant. There is this resistance, support, resistance. You see, yeah, your zone have to be very, very significant. About taking profit in these models, those who are, for those who are joining right now, can see what we were talking about. Yeah. Let me paste it here. And I think we're gonna, let's add a 5, the fifth point, about taking profit. The take profits are based on are based on what? Your take profit will be based on the source of the move, on the source of the move. So in this case, which was the source of this trading market move? So this is the source. This is our original source. Yeah, so this will be, your take profit will be based on this base candle here. So that's why you're gonna take your profit. Yeah, so that's a what RR. That's a 113 risk reward. Yeah, so hapo hakunanga kubagain. Yeah, and remember, all these things should happen. Let me take this to this side. Remember, all these things should happen before the market touches this source. So if this doesn't have, if okay, let me write here. So this is our source, demand zone, yeah, for the bullish market, yeah. So this is our TP. So this is our TP. Yeah. So remember, there's a time you can see the market didn't form a second supply. You see, like it formed a first supply. This first supply pushes the price down to the source. So if that happened, if the price touches the source, if the price touches the source before creating this second supply, so you invalidate that setup. Yeah, you see that you wait for a first supply, then the price push is get pushed to the source, and then form a second supply and you find an entry. No, the rule of trend line breakout strategy, even without adding the supply and demand, if the source get touched before a second supply is formed, or a retest is formed, you invalidate that breakout. Yeah, you don't trade that one. Yeah, for that you wait for a retest down there. Like yesterday, I gave out a setup on our platforms. Yeah, on how to trade the trade. It was a CAD JPY setup. Yeah, I said if the price touches this, I had indicated this as the lower low the source. If the price touch the source or break the source before going up, you wait for a retest to the source and sell heavily. So that's another thing. So your take profit will be here. Yeah. So that's why you take your 80% or 90% or 100% profit. Yeah, so for those who are patient enough, you can wait for a breakout here. If the price breaks out, or you can do this, you can take all the profits and then wait for the market to make the decision. If it breaks out the source, you wait for a the break of this source. Let me indicate. If the price comes and breaks this source, you wait for a retest and sell. And the retest should be not, you have to understand the retest is not just a retest. Sorry, let me delete this. So you have to understand what I mean by a retest. For those who have covered the supply and demand, you know what a retest is. So a retest is not just that you come and retest, this line here or this support. No. The retest can be even inside kiasi even. Yeah, remember a retest or a trade continuation is usually on a very significant zone. So you have to find a very significant zone. Yeah, you can find the setup that, like I shared about the sell model, about the failed QM setup. Yeah, for the continuation, because they know people are waiting for breakout and retest of these. So they have to do some stop hunt. So as a pro, or as a pro retail trader, you have to be patient enough and look for significant zone above that support, because that's where they're gonna do the stop hunt, and that's your entry. Your stop hunt is your entry, and ride with them. Yeah, so I hope this example is clear. I'm gonna show 2 or 3 more of the sell model. Yeah, so I hope I'm clear. Yeah, so let me show you 3 more examples, and then we're gonna maybe edit this video and do a separate buy model video for the purpose of not getting confused. Yeah, I think that's okay. So another example, I hope everything's clear. Yeah, so we are trading the return. The entry is based, the point number 4 is based on the return to the second supply zone, which was responsible for the consuming or the break of structure of the second demand zone. Yeah, so you have to, the entry is based on that, and the take profit. Uh, that's the point that I always say, don't bargain. Eh? So there was a person who asked about how to swing trade a 100 pip setup. Eh? So I think your question is answered. Eh? I think it was Vin, the G World guy. Yeah. So Gnax, yeah, Gnax. Eh? How to swing a 100 pips setup. Eh? I think this is an example. This is a clear example of how to do it. Eh? Yeah, because in this case we don't bargain. Eh? The price have to touch the source. Eh? But at the same time you don't have to be so much greedy. Yeah, so for me my rule is how I take profit. I'll do a video on that. Eh? If my risk was 10 pips, most of my time my risk is usually 10 to 15 pips. If my risk is 10 pips, when I'm in profits of double my risk, so my risk was 10, so profits of 20 pips, I take 50%. So for example, if I've used a one lot, a risk of 10 pips is 100, using the major currencies is $100. So if the price moves 20 pips, I take 50%. 50% of one lot is 0.5. 0.5 times 20 pips, that's then multiply by pip value, that's around 100 USD. You see, I bag the risk. The stop loss remain at the position, at the negative side. So, for example, I took the 50%, 0.5, I remain with the 0.5 lot, and for example, the market reverses and hit my stop loss. How much will I lose? I'll lose only $50, and I have bagged 100, so I'll be plus $50. You see? Yeah, I'll do a video on that. Yeah, so it usually make a lot of sense. Every time you're gonna be in blues, even if it's small blues, it's better than losing all of it. Because most of the time market gives 20 pips and it reverses and you are out and you are like, the setup didn't play. No, you didn't pay yourself. The setup was right. Remember, a reaction of 20 pips is enough. 20 pips is enough, my friend. Imagine you had a big account of like a million, or 10k USD. Use like a 5 lot, with a 10 pips, that 1k USD. You see, so it's not, 20 pips is not small. No, it's not small. It's a lot of money depending on your account size. So don't usually, yeah, it's not a must you get 100 there. Yes, we swing 100 pips when we have already paid ourselves something. Yeah, so I'll do a video on that, on how I take my profit, and you come to love that, because you never lose. Even if the price moves 20 pips and it reverses, or 30 pips and it reverses to your stop loss, you always be on the safe side. Yeah. Okay, so we can do now the two more chart examples. Yeah, so that we can jump into the buy models now. Yeah. So let me do some two of these examples. Yeah. I know it's a weekend. I don't wanna, consume a lot of time. So GBP AUD, yeah, this one usually present a lot of this setup. And there was a time I told you guys to find out why I love CHFJPY. So now this is the reason why I love CHFJPY. Yeah, there's a time I asked you to find out why I love CJ, because this setup presents so much. So the trend line. So the first being we said, let me copy paste the steps. Yeah, let's copy paste them here. Okay. Um, the other one had no point number 5. So let's replace it with this one. Yeah, yeah. So I remember us telling you guys to find out why I love CJ. Yeah, this is one of the reason I love CJ. Yeah? I show examples on CJ. It usually plays a lot, even the buy models. So these are sell model. Yeah, so let me write here. Is a sell model. Yeah, so the first point was to identify the trading market. The second, identify your first demand and your second demand. So this is the first place where the market changed the character, the second place where the market changed the character. So which supply zone was responsible for breaking the first demand? It's this one. Yeah, this is the zone that pushed the price below this demand zone. Which is the second supply zone that pushed the price below the second demand zone. As you've seen, I've been telling you to be keen. So if we take this as our second, did this break this? No, 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 no. It just formed wicks. And wicks, as for our style, wicks don't break structure. It's just fake outs. Yeah, so this is not a valid in this strategy. It's a valid supply, but it's not valid to our strategy. Okay. Yeah, so it have to push the price below the previous demand zone, fresh demand zone. Yeah, so as you can see, this one didn't, this one didn't, this one didn't, but we have a base here. These are drop, base, drop, supply zone. That's This is the only supply zone that was able to push the price below the second demand zone. Okay. Yeah, so we take the 50%, and remember, as I said, it's not a must it reaches the 50%. Remember, you have to confluence with the other knowledge. Yeah, yeah, you have to confluence with the other knowledge that I had sent. You can refine this based on the lower time frame. Yeah, okay. Yeah, you can confluence with the significant support resistance. You can confluence with the failed head and shoulder pattern. Remember? Yeah, yeah. So it's usually a low risk setup. Like for this case, if you will find these, it's allowed 10-20 pips. Yeah, okay. So you have to confluence. I would have said, as I said, it usually touches the open of the basin candle. So in this case, this is let me put the arrow one. Okay, for this case, this is our basin candle, this green candle, this is our base because it's a drop, a base, and a drop. So these are our base. The open of this candle, you can see the price touch the open of this base candle and dropped. Yeah, so remember, don't over refine. Okay, yeah, don't over refine. Don't try to catch the best entry enough. So that's our to take profit. So that's a risk reward of around 180 pips. Yeah, so those who are asking about swinging 100 pips, yeah, I hope you are getting the idea now. Yeah, so you see some 1,000 USD profit floating there, and you are like, oh, I've made money. No, 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 it's not yours until you bag something. Yeah, it's not your money, it's a market money. Yeah, yeah. So about the TP, we said the source. The source is the TP1. Yeah, yeah. So as I've told you, if the source get broken, you wait for a retest. Yeah, yeah, a retest, and then you continue selling the dip like the yesterday's card J2 setup. Yeah, so as you can see, the market broke the structure here. It's this simple, guys. I've not hacked anything. It's just this simple. So you can see the market broke structure and it retested there. Yeah, and then continued to drop. Yeah, make it simple. Don't complicate things. Yeah, this is one of the strategy I find easy to trade. I want this color change. Let me change this color so that it can be a bit clear. Okay. Yeah. So as I told you, if the source get broken, you can take all your profit there, or the 80% or 70%, and wait for a retest, the supply and demand style. So the zone must be very significant, and as I've told you, the zone is usually above the support, the broken support. So don't wait for a retest on exactly on the support. It's usually above. Yeah, the price they do the stop hands. So you have to find a very significant zone. Yeah, to do that. Let's say where it may be tested. But test this strategy. I hope, as I can see, this on the lower time frame. On the lower time frame here, we have a failed QM pattern here. So that's why they tested. Yeah, these things that I have circled with an elite. Yeah, in the lower time frame, I'm sure there is a failed QM pattern. Yeah. So it's this easy, guys. Yeah. Don't complicate things. This is one of the easiest strategy you can trade the whole year without complicating things, but needs a lot of patience. Remember, the higher the time frame the setup is, the more the reward. So if you catch this setup on a like M15, you're gonna get your 30-50 pips. 1 hour to 4 hour, you're gonna catch around 70-100 pips. If you catch it on a daily, my friend, you're gonna bag around 500 pips. Yeah. Remember, pay yourself something and hold the thing to the source. Hold the price to the source. Yeah. Sometimes I say it's all or nothing. Yeah, because you can remember. I mean, everyone can remember most of the time that you left a trade with small profits, and then the trade gave out more than 100 or 200 pips, and then you are like, oh my god. So I try to do the things that I did when I was I was a newbie or a low level retailer, is taking small profits. Yeah, unapotea na $3, $5, psychology, like, but right now our psychology, I think most of us, our psychology are a bit stable. If you have a problem with that, DM me. Yeah, I have a medicine for that psychology. So right now our mindset is a bit stable. So hold that thing. Yeah, they're gonna try to mess your psychology on the way, but you have to be, you have to practice. Yeah, so that's our second example of the how to trade the trendline breakout strategy like a pro, the supply and demand style, the forex time continuum style. Yeah, this is our very own one. So this is another setup that you could have read. Yeah, so the retest of these broken support. Yeah, and you could have bagged so many pips. So that's a thing about trade and breakout strategy. Even without adding the supply and demand, that's a thing you don't wanna miss. If they break the source of the move, you wait for the latest. Now you add the supply and demand, because they're gonna do the stop hunt. They know people are waiting for the latest. Remember, our strategies are not always wrong. It's just that we lack a lot of patience. Yeah, so you find yourself, and the market always moves to our direction. The problem is the stop hunt, because you are not patient enough. Yeah, so you have to be patient enough. So these are style. One of the style that gonna pay you. Yeah, and I use it most of the time. One of these days I'm gonna drop a setup of it. Yeah, remember, you can use these model on your as a lower time frame confirmations. So you can, so as your price is approaching, So the trading market here is when the price is approaching your high time frame point of interest. You wait for the touch of the high time frame point POI. Let's assume this is our high time frame point of interest. Let me put something to indicate. Let's assume that's our high time frame point of interest. So you wait for the price to enter your zone, and then you wait for this to to present on your M5 or M15, and you catch the best entry, then the one that's not gonna mess your psychology, because easy aggressive entries, you see, like if you've entered with an aggressive entry here, you see all this psychology being tested. Yeah, so here you'll be like, oh, it's not breaking this zone. This zone gonna push the price up. Who told you? It's just that you try to cut the best entry, and they are trying to mess up your psychology. Yeah, so when the second demand is taken out, that's when I usually consider now the change of character is confirmed. The first usually give me 50% of change of character, but when they break the second demand zone, that's when I confirm the change of character. Yeah, so it's these guys. So for the entry, I've said 50%. In some cases, they touch the open of the basin candle, this green candle, and they drop. So you have to do some refinement on the lower time frame. Yeah, and find a significant zone. Yeah, a zone with the most touches. Support, 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 support. You see? Yeah. So that's the second example. So I think we can look at the third example and call it a session. I think we have looked at that one. So about take profit, tumesema hakuna kubagain. You have to wait to the price to touch your source. Is it not moving now? I think I had another example on this GBPAU. Do you remember I'm on higher time frame? So chances za kuipata are not so much like in the lower time frame. But for the case of finding it, finding the example, I had to, narrow to to go to the higher time frame to get it so much faster. Because for lower time frame, you have to, do a lot of. So here I have an example, I think. So wenye walikuwa wanauliza kuhusu take profits, not take profits. Yeah, take profits and how to hold a 100 swing, 100 pip swing. This is one of the strategies that can help you with that. So I think this one is clear to everyone. Let me put it on automatic mode. So this is clear. I will not even write anything. This is clear to everyone. These are, so I just use this mouse. So these are first demand and second demand. Which supply zone was responsible for breaking this first demand zone? This one. Then this one puts the price below the second demand zone. Then 50% of the second supply. Kaboom! That's 260 pips with a risk of, let's say, 30 pips. So that's around 1 to 8. Yeah, 1 to 8 reward. No, not 1 to 8. Yeah, 1 is to 8. So guys, you have to be patient. Yeah. So I hope the example is clear. Yeah, so guys, it's this simple. Don't complicate things. Yeah, so you first identify first demand, second demand, first supply, second supply. The entry is based on the 50% of the the second supply, which is responsible for pushing the price below the second demand zone. Okay, yeah, let me look for another example. Yeah, CJ. This is the CJ I was telling you about. Yeah, so this is our source. This is our source demand zone. Yeah. So let's push this trend line. Let's push this trend line. Yeah, so this is where this is our source demand zone. So tumesema source, if the source get touched, if the price trade to the source before creating a second supply, don't trade that setup. Yeah, and remember I've told you not a must that you trade you wait for the price to return to the second supply exactly at the second supply. No. Like you see in this case, when the price was pushing, when this supply was pushing the price below this demand zone, it created a hidden supply. So these are 2 hour. If you know to M30 and 15, you'll see a drop base drop here, a drop base drop supply. So this is now the supply which was responsible for pushing. On the higher time frame, you'll see like it's this one, but on the lower time frame, it's this one. These two kissing candles, the Malobozu candles. So hapa kuna supply zone on the lower time frame, ndio maana ili trade on these, not on these. On the higher you will see like it's this supply, but it's these. In the real sense it's this on the lower time frame. So that's where the price traded. Yeah, this was a 114 reward setup. Yeah, so you don't bargain. Kwanza hii CHF JPY, this setup present a lot. Yeah, so points you've noted is that a change of character is usually a change of character when a second demand is taken out. This is on the sell model. Yeah, so on the first, when the first is getting, the first demand is taken out. Yeah, there's some change of character, a 50% confirmation. But when the second demand is taken out, that's when you confirm now. Now we are bearish. Yeah, cause those who've gone through ICT, the deep one, there's some things were called the real structure points. Yeah. So you have to be keen on that. About take profit, don't bargain. Just pay yourself something on 50 pips, 20 pips, 30 pips. Or I usually take my partials at 1-2 reward. 2 pips, and the price moves in profit of 40 pips. That I pay myself some 40 to 50% of my profits, and let the rest land to the source. Yeah, so about take profit, no bargaining. Yeah, you have to wait for the price source. Source TP1. So I think I'm gonna end this video. I know I've used a lot of your time, but I know I've not wasted. At least I've said something. I've added something to your knowledge, or maybe you knew. Because on the higher time frame, you can see a base above. You can see a base, but on a lower there is also something, and this zone is significant. You can see. So you have to know to go to allow them 15 and check if there is some hidden supply. Automatically hii kitu ukizoea, ukiona tu hidden supply or these two kissing candles, hata uhitaji kuenda to the lower time frame, you just dive in. Yeah, it comes automatically when you allow to the lower time frame. Yeah. So for these, they've retested. I've seen a supply and demand retest here. So this was our support. As you can see, we had a support here. So there was this retest, but I'm waiting for something clear on Monday to know if I will sell this deep. Yeah, if they break the source retest, you sell the deep. Hapo pia hakuna kubagain. Yeah, that's for buy model. So let's add this video for the sell model. I'm gonna add the video there. I'll upload the next video won't be live, I think. I'll do a live. You can watch it later at your own free time. Yeah, yeah. So guys, remember to share our platforms. Yeah, share our content. Remember our content is free. Yeah, hii mwaka tulisema we're moving together. Mtu akiachwa atakuna atalaumu yeye mwenyewe. So share. Yeah, and subscribe, like if the content is genuine, like, thumbs up. Yeah, at least it can motivate to do more. Yeah, so guys, I'm gonna add the video. Yeah. So thank you for those who have watched. I'm Harboard for those who support. Yeah. So on the next video, I'll do the buy model, which will be a 10 minutes, 20 minutes video. Yeah. So guys, thank you. Yeah. Have a great weekend. Yeah.